So when we say market structure, it is something very big in the industry. We have a lot of things to be checking on. Market structure is one of the most important aspects of trading that as a trader you need to pay attention to understand. We have basically three types of market structure, which is the uptrend structure, the downtrend structure, and the consolidation structure. Now, the uptrend structure is a structure that represents buyers in the market and always used to come by creating what we call the higher high and the higher lows level. This is how the uptrend structure is to come in the market. Example, we are going to find something like this. This is how the ways of uptrend structure usually is to come by creating higher high, higher lows, and what higher high levels. So this is an uptrend structure, and this structure it automatically represents buyers in the market. So now anytime you find an uptrend structure, you're going to see that it's creating the higher high level, which is this place. Always the higher high are in this place, while the higher lows are always at the wood at the down level. So this is the higher high and then this is the higher low. Okay, what's the important uptrend structure in the market, or shall I say in general, what's the importance of market structure in the market? Okay, as a trader you need to understand that market structure is what is showing you the basic movement of the market. As you all know, an industry like a forex market or crypto or anything that regards to technical analysis, it have a lot of things to be checking out. But market structure is one of the most important aspects that you need to pay attention, you need to understand, you need to like get to know how the market is moving before you start investing. It's just a simple terms. You as a person, you don't have a power to control the market because you only have less, and that amount of money you have, you need to follow up the market structure, follow up the big boys in the trade so that you can easily make money. Without market structure, you can't easily identify a market movement. Okay, as we continue, we have an uptrend structure, and we all know that uptrend creates higher high and what a higher lows level. Okay, during the higher high and higher lows level, that's what we call the retracement, or should I say a pullback. Some traders know it as pullback, while some traders know it as retracement. So this is what we call the word retracement move here. This is what we call the retracement. We can still call it the pullback. Then this was the word the impulsive move. Now we have two types of the movement. We have the impulsive and we have the word correlations. So now this is the correlations, and then we shall I say or the pullback, and this was the impulsive move. Now let's head into the chart so that I can show you how it usually come in chart. Now this is Ethereum, and what we can view from the chart of Ethereum from here, we can basically spot an uptrend from this move here, because if you can see from this blue line here up to this blue line here, up to this blue line here, you're going to see that the market is literally going high more than you expected. So now this is what we call the higher high levels of the market. From here, this is the higher high. The market literally break downs and still push up by breaking the previous high, and still would go for a retracement, still breaking the other previous high before going for the final retracement, and still boom, the market have moved up. So now here we have an uptrend market structure where we are going to spot out our break of structures to see our break of structures in the market. Okay, when it comes to break of structure, we have what we call internal and external break of structure. Now the internal break of structures, those are the little one here under here. Example, like this one. Fine, like this one is an internal break of structure, while this one is the word external break of structure, and you need to pay attention to the external break of structure, not the internal break of structure. In this case, we have from week here to week here, so we are not covering up by removing week to week, because week to week is a totally invalid of break of structure. As a trader, you need to pay attention to the week to real body of the market. That's the only place you can spot your break of structure. That means from here to here, we have a break of structure. Let me use the caps lock, a break of structure. Now, and still from here also, from this week to here, if we draw it, it's a week to week. So now that means it's a week to week, and we can't spot week to week because week to week is a total invalid break of structure. So now that means we have an invalid one here. Then we should just spot it from this high to here. We have another break of structure. Then we're going to follow up by the higher one, which is from here up to here. It says still week to week. That means we still don't have break of structure there, because a valid break of structure, it's supposed to be from week to real body, not from week to week. That means we can only spot from this high again to this high. That is the only place we have break of structure. And for more information, break of structure doesn't have limit in market. You can able to get more than 5, more than 10, more than as plenty as you find it in the chart. So break of structure doesn't have limit, and you can also get it 1 or 2 in the chart. It depends on how you find it. So now this is for the uptrend market structure, and I hope it is clear. So now let's follow up by the downtrend structure. Now when we see downtrend structure, what do we mean by downtrend structure? We mean a structure that is going down, representing sellers in the market, or should I say a structure that sellers are in control of the market. As you all know, uptrend structure, buyers are in the higher control of the market, while a downtrend structure, sellers are in more control of the market. Now this is a downtrend structure, and market it normally creates what we call higher low, lower high, and lower low. Lower high and what? Lower low. So now this is the exact point of lower high. This is the exact point of lower high, this high, and then this is the exact point of what? Lower lows. So now market is creating lower high and what? And lower low in an what? In a downtrend structure. And market is always creating break of structure towards the downside, towards the down level, rather like it have an opposite word of the uptrend. Uptrend always have the break of structure toward the upside, while the downtrend structure have break of structure toward the downside. So now let me go into the chart and show you where we find a downtrend structure and how we can able to figure it out in the market. Still on Ethereum, we have a downtrend structure here. If you can see, the market is literally going down here. So now market is creating the lower high here, the lower high here, and the lower low here, the lower high here, also the lower low here. We still find the lower high here, and then the lower low down here. So now how do I spot my break of structure? It still have a same rule with the uptrend. Week to week is still an invalid for us, so we can only spot from what? Week to body. Now here I have a one very clean break of structure, so where I can just type it up, break of structure, and we still have another one here, still from the down level. So here also we still have another break of structure, we still have another break of structure, then another one from this down, we still have another one. As I told you that we don't have limits, you can able to get as plenty as you find it in chart. And also market structure is one of the most important aspect. If you are trading anything, forex, crypto, anything you are trading, you need to pay attention to the market structure to understand the movement of the market clearly. So now if you can continue, we still have another one, we still have another break of structure from here, just movement from here. BOS is another break of structure, and also market is creating the here as in the word, as in the retracement, rather than the uptrend structure, while the retracement is going down, while this one is literally going up. This is the retracement move, and also in this case this is the retracement move here. So we have the retracement move here, and also here is the retracement move here, then here is the impulsive move. Those are the basics market structure, which is the uptrend and the downtrend. Now let's follow up the last one, which is the consolidation market, and many people also know it as ranging or choppy market. Now some people call it choppy market, while some people call it ranging market. It all the same. So now something like this, in the case that sometimes market will be just staying at one place, plenty, none of structures, something like this. So now this is what we call the ranging market. So in that case, we don't have anything like higher high or higher lows. We don't have anything. So now on this case, we will step out of the market. We are not trading it. As you all know, we look for a buy on an uptrend, we look for a sell on a downtrend. Then for a ranging market, we step out of the market. So I need to show you that as a trader, you're not supposed to be taking trade every day. Now let's check on the ranging market. Example, just a simple move like this, still on Ethereum. You can see this place, it look like a ranging because we don't have anything that breaks any high or that breaks any low. So this is a ranging market, and in this case we step out of it. We are not trading it. So that marks the end of our today episode, and I hope it's very important, and I wish you guys have learned a lot. If you have any question or anything that you want me to explain more for you, you can drop it in the comment section, and I hope I can do that for you. Thank you, and enjoy the rest of your day.